Industry analysis on IT services in the banking industry by Group 10. Outline agenda. Analyse the online banking industry in terms of Porter's 5 forces, threat of new entry, buyer power, threat of substitution, supplier power, and competitive rivalry. Pastel analysis, political, economic, social, environmental and legal factors. Pastel analysis of the online banking industry. Services offered, check balance and account transactions, view e-statements, pay bills online, transfer money between accounts nationally and internationally, mobile phone top-up, open 365 days a year.
Political factors refer to the degree of government intervention in the economy. The legal and regulatory factors included are labour laws, tax policies, consumer protection laws, employment laws, environmental regulations, and tariff and trade restrictions. The banks are subject to regulations by the government. The government are involved in the running of the banking industry. Between 2008 and 2014, the state paid a net amount of €60 billion to stabilise the banking system. To this day, the government still owns shares in the banks. The value of the shares owned by the state in AIB, Bank of Ireland and Permanent TSB is valued at about €17 billion today. Economic factors. Inflation and interest rates have a dramatic effect on consumer spending power, e.g., if Ireland sees a decrease in economic growth, this limits consumers' ability to have confidence in the economy. The recent downturn in the economy and rise in unemployment could see potential customers limit their financial transactions and interaction with online banking. If we look at online banking from a business to consumer, the relationship with their local branch can be very important, especially with an older customer base. The online banking sector has to provide a high level of security to protect their customers and also the training of their customer service reps. Social factors. These include lifestyle changes, behavioural changes, a record of
banking transactions,
and fraud and theft. Technological factors. Currently, AIB is the first responsive banking website in Ireland and the UK, has around 1 million customers active online, has 204% increase in mobile users. Technology used to access online bank accounts include AIB mobile banking app, laptop, iPad, etc.
Environmental factors. Online banking has become more useful and popular as people's knowledge of technology has improved, allowing things to be done more efficiently online. The use of online banking cuts down on the need for excess employment in the banking sector and provides jobs for highly skilled IT personnel. Less paper is used as a result of the online services offered. Mistakes are less common as human error is reduced. Legal. Online banking regulations include licensing and supervision, where banks usually require a banking license from a national bank regulator before they are permitted to carry out their services. Minimum requirements. A national bank regulator imposes requirements on banks in order to promote the objectives of the regulator. The most important minimum requirement in banking regulation is maintaining minimum capital ratios. Market discipline. The regulator requires banks to publicly disclose financial information and depositions, and other creditors are able to use information to access the level of risk and make investment decisions. Porter's 5 forces analysis. Threat of new entry. The threat of new entry is low. The Irish banking sector remains very conservative and consumers are resistant to change. The banking crisis in 2008 and 2009, when the government had to step in and refinance the banks, did not give the consumers much confidence and therefore will limit the consumers' confidence in changing. Irish consumers in general prefer to remain loyal to the bank they're used to dealing with and will resist change like password and login details. If it is a business account, they they don't want the hassle of notifying customers and suppliers. In 2006, Halifax purchased ICC Bank and took over its mortgage sales, but in February 2010 they decided to shut down operations with the loss of 750 jobs, saying the future of the company was not viable due to unpaid loans from property developers.
Bargaining power of suppliers. The bargaining power of supplier is high. Capital is the bank's primary resource. Major suppliers of capital, customer deposit, mortgage and loans, security and collateral. Bargaining power of buyer. The bargaining power of the buyer is high. Factors influencing bargaining power of the buyers: up-to-date technology, customers' ability to use technology, for example, elderly may not be able to use smartphones, tablets, etc. Switching costs, example, cost to close an account and open a new one elsewhere, customer loyalty. Threat of substitutes. Threat of substitute is medium. Customers may use a local credit union or post office as financial institutions, may have greater trust in other financial institutions due to recent uncertainty in the banking sector. Also, a large threat from non-financial competitors like insurance companies. Factors customers consider: interest rates, payment methods, and whether security is required. Competitive rivalry. Power of competitive rivalry is high. The banking industry is highly competitive. The way the banks lure customers away from competitors are higher interest rates, lower financing, and a wider variety of services. Key takeaways. For now, the banking industry looks like it will remain the same. This is a very competitive environment, and the financial institutions need to be ahead of their competitors at all times. We have looked at the banking sector under pestle analysis and Porter's 5 forces as a tool to help us understand the risks involved in the market of online banking.